This is the FHA program, and I'm going to talk about the changes that are in this program that apply to 2009. We're going to go into financing, and we're going to go to FHA. And we'll put in a sales price, let's say $300,000. It's not a HUD repo, and it's not a 203K. I will go through a 203K in another tutorial. Okay, we're going to enter, we go to fixed. Okay, the interest rate is going to be 5.5 for 30 years, giving us a down payment of $10,500 or 3.5%. The first trust deed is $289,500. The MIP this year is 1.75, so that's 5,066.25. Added to the loan gives you your total loan. Your payment on that, based on 5.5%, will be $1,672.51. There's your property insurance, $90. Property tax, based on 1.25, is $312.50. Mortgage insurance is 0.55 if your down payment is under 5%. If I was to put 5% for the down payment, you'll see the mortgage insurance change to 0.50. So that's all done automatically for you, and that's the benefit of putting more down payment. Go back to 3.5%, and we have our 0.55 back. There's no Mellarus, no flood or earthquake, but if you did have those, you would put that number in, and no HOA. So our total payment is $2,207.70. We're going to go from here to the buyer's closing costs. 1 point origination, say no discount points, $350 for appraisal, credit report 65, underwriting, and these numbers will vary based on who you do business with, but it will hold whatever your last answer was. So let's say underwriting $450, process and docs $595, $100 for admin fee, and $50 for wire transfer. Here's your 30 days of interest. If you like to use 15, change the number to 15, and you see the blue number changed. I like 30 because I like to be on the high side. Here's your 2 months of mortgage insurance in pounds, 6 months taxes, 14 months insurance, which would be 1 year policy and 2 months impounded. Here's your escrow fee, title insurance. If there was a legal fee, you'd put it here. Your recording, transfer fee, no home warranty. Let's say we have $150 for notary, $25 for a flood cert, $200 for an inspection, and $300 we want for miscellaneous. That would be any padding. Now we can put in any credit if the seller, the lender, or somebody else is going to assist with any of these costs. If you choose closing costs, we will subtotal that amount for you. If you want to put in a certain dollar amount or percentage, let's say you want 3%, you would just put in 3, enter, and it will give you the 3% or the $9,000. If the seller agreed to pay only the prepaids, or if they agreed to pay all of the closing costs. So it could be an amount, just the fixed closing costs, the prepaids, or all, or a specific percent or dollar amount. If you have any reserves, and let's say they gave you $2,000 for earnest money, and you want to calculate the APR on the first. So here are the answers. $11,403 in closing costs. That includes the prepaids. Minus $9,000 the seller agreed to pay. Leaves us with $2,403.48 in costs, plus a down payment of $10,500. Gives you a total cost minus the earnest money of $2,000, brings you down to $10,903.48 as the buyer's cash to close, with a 6.6 APR. Now you're ready to print. You can print in either in English or in Spanish. Say OK. And there's your printout. In this case, the printout is larger than the screen area that we have. So what I'll do is I'll also attach the PDF file for this printout so that you can see that. If you have any additional questions, don't hesitate to call anytime. The number is 909-597-4504. My name is Mary Ann, and I can answer any of your questions. And I will also be doing more of these tutorials, so stay tuned.